You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is something you will research and make sure that it fits you. So please take notes. Doc Severson of 12-Minute Trading, capturing consistent weekly profits with zero-day options. And he is going to tell you all about that.
Hey, good afternoon.
Hey, how are you?
I'm doing great.
Doing better than me, I think. Let me just do your quick intro, and then you can fill us all in on the exactamentos. Doc's story mirrors that of many retail traders. He pursued the usual corporate route, got 3 degrees in engineering and business, and had a successful career in telecommunications. He eventually found that the corporate environment wasn't for him, so he committed himself to learning how to trade the equities, the options market. In 2005, he did what every retail trader dreams of doing and quit a 6-figure corporate job to trade for a living. Well, I bet that was scary. Or maybe not, if you had all your ducks in a row. It wasn't long before other aspiring traders found out about what Doc had done and beat a path to his door to have him help them find their own freedom. In fact, many of the points that Doc will share with you today are the exact steps that he had to take to cut the cord on a paycheck and trade for a living. And even if you've heard these suggestions before, you probably haven't heard them explained in the way that Doc does it. So thank you for coming. Thank you for waiting. I appreciate your flexibility. And I love it when you come and visit with us. And I know everyone here is going to be happy that they heard your talk. Plus, this is being recorded, so your session will be up live on not live, but the recording will be up on tradersexclusive.com later tonight or tomorrow. I'm going to mute myself. I'm going to turn you into the presenter, and I'm going to let you take it away because I know you have to be out of here at a certain time. And again, thank you.
Yeah, I'm going to try to get everybody caught up. If possible, I may just go a couple of minutes past. Let's see if I can get the right screen up here.
Right now, it's going to cut your mic for about 3 seconds because I'm going to give you the questions boxes and all that good stuff. So hold on 1 second. And you're back. Good deal. I'm going to mute myself and you take it away.
Okay, so what I have to do here just really quickly is I have to get it on the right screen. Give me a second here and I'll get it on the right screen.
You know, once you've got your sharing going on, you can go to the sharing at the top of the go to webinar menu, and where it says show screen, you should be able to see a little drop down there, and you can switch your screen right on the fly without having to stop and start.
Okay, let's see. Okay, there's the sharing menu. Let's see, settings.
So it should give you, how many screens do you have?
I have 6 of them.
Okay, and you know which screen you want to share?
Yes.
So when you pull that, if you're under, like there's a big, like a play button under show or in show, the big circle. Are you seeing that menu?
Okay.
Okay, cool.
It's hiding.
Awesome. Okay. Yay. Oh, now we've got your email.
Okay, let's see. Hold on a second here. I think it's this one here. I think it's screen monitor 3. And we will get started here in just a second.
And that's Yahoo Mail. There you go. All right. Now I'm going to mute myself. Take it away.
Okay. Thanks, Sherry. All right, everybody. Thank you very much for your patience. It's been, I'm sure, a long day for a lot of you, but I'm going to try to get you caught up as soon as possible here. So one of the things that I do is I like to be very visual about what I talk about here. So I'm going to give you the old bouncing ball. We're going to work from the lower left-hand corner all the way up to the right-hand corner, from hello all the way up to summary and next steps. So again, my name's Doc Severson. I've been around for the better part of 20 years now. So it's been back in 2005 is when I went, quit my job and went professional with this. It's been quite a journey. I don't think I could have picked a more volatile time in the market over the past 18 years or so. And what I found is when I did hand in my notice and started trading for a living from home, it got to be very isolating. It's just you and the dog and the market, and that's it. And what I found was a kind of a synergy there, because people found out that I had quit my job, was trading for a living. So they started knocking on my door and said, hey, could you teach me the same thing? And so what I found was I really enjoyed it, and I really love doing this. And I hope that this comes across in today's presentation, is that I love to help people. I love to share things with people. I love to make that connection for people in a way maybe they didn't realize or they didn't expect. Or what I love to do is to show people how much they already know. And I did that in a couple of books. So first of all, you can get these on Amazon. Hacking the Holy Grail is a book I wrote a few years ago about the challenges that we all go through. We're all looking for the Holy Grail. We're all looking for the easy money. And really, it's between your ears. The big key towards performance is between your ears. The other book I wrote recently was Fractal Energy Trading, which talks you through using multiple time frames and how markets really mimic what we see in nature. So you may have heard of me at various services over the years: Options Linebacker, Options MD, Theo Trade, Doc's Trading Tools, Ready Set Trade, even Ready Set Crypto I've been involved with. So I love helping people. This is what I do. I trade the market all day long, and I help people. So what am I going to accomplish today? What do I want to share with you guys today? I want to see the small investor get started without taking advantage of, right? So I think that's very important to me. Number two is that I want to see the small trader win. Over and over again, I hear people saying, look, I don't have 50 grand. I don't have 100 grand. I don't have 7 figures to trade with these things. I've got a small amount of capital. How do I get started with this? I'm flying right over the tops of the trees. I can't afford to dip a wing it. How can I get started with this? So my purpose today is to help you understand some of the techniques that are out there, some of the new options, show you some setups, and in general, help you decide if this is something for you. So stick with me for the next 45 minutes. We'll see if I can get you in on time today. I'll walk you step by step on how to start creating income with a simple trading strategy that puts the odds in your favor, and one that you can start using tomorrow. More directly, I want to show you how to win over 90% of your trades. If you're lacking confidence, I want to show you how to attain that confidence. And for every make $1.70 in profits for every dollar that we do contribute in losses. So we want to show you how you can create consistent results. Now, why are we here? We are all here today. We are joined together because we're all trying to set ourselves up for financial freedom. The problem is, most of us learn about these through yesterday's methods. So all the media that you consume shows you yesterday's methods of setting yourself up for financial freedom. So the old method was to grow the pile. The old paradigm was to continue to grow your pile of assets and then live off the interest, right? So get $1 million, live off of 50K a year and 5% APR. Okay, but the problem is interest rates are creeping up, but it's still well below the annual rate of inflation. This is not going to cut it, making 4% on your money. So you've all heard of annuities and bond yields and stock dividends. Those may have worked pretty well at some point. They no longer are working right now. I don't know if you've tried to go through earning income on these, but it's really, really miserable. It's not worth the effort what most of these professional money managers are going to get you with these 3 techniques. So this means that you can follow the old paradigm of growing your pile of assets, but being able to make money on your money is no longer there using the usual techniques. So what's going to happen is Retirees are going to be shredding through their principal in no time and wondering what changed, even though this has been happening for the past 2 decades very, very slowly. So, in the words of Private Hudson, who I think coined the phrase best, what do we do now, man? Game over. Well, I don't think so. I don't think so. We just need to think differently. Income to the rescue. So income is what we once received through interest, dividends, and bond yields. How can we replace this? We can use passive and active income. Now, passive income is kind of the holy grail of income. People want to do this all day long, right? Because it doesn't require active participation. So people think you can do this by just sitting on your couch all day long and earn money with it, which could be true if you do it right. But there's also active income, requires participation and effort to earn income. Typically, what you think of this is a job. So a job is active income. You're trading your time for money. Now, can we use stocks for this? Can we use stocks to trade for income? Can we create it by trading stocks alone? Well, it's possible, but it's difficult. Stocks are still expensive even after the bear. Requires a massive amount of capital to trade the market leaders. Day trading stocks requires too much capital for smaller accounts. And then you've got that pattern day trader rule. It's very restrictive for a reason, right? So trading stocks for income, not very efficient. So to me, options are the answer. Passive income, we can sell longer term options. We can act just like an insurance company where we're collecting the risk premium from option buyers who are happy to sell us. They want to buy that premium, right? Just like why you buy insurance today. Or we can also pursue active income. We can look for short-term opportunities to either buy or sell options using the leverage of options to more efficiently use capital. So to me, options are the perfect vehicle for creating income and replacing those lousy dividends and annuities and interest. So if you haven't traded options before, a lot of people are saying, hey, it sounds good. I always hear you guys talking about options, but I'm intimidated by them. Let me tell you, you've already used options in your daily life. If you've ever used a coupon, if you've ever bought an insurance policy, you've already traded calls and puts. So we use very simple combinations of options to learn income. Anybody can do this. So my assumption for today being traders exclusive, this is an advanced webinar. I'm going to skip by the usual background on options and get right to the strategies. So what we're going to do today, how do we generate active income using weekly option strategies? Now, the first thing I'm going to tackle is getting to a certain goal per day. This is where I want you to get to, certain goal per day. And so earning $100 a day, can you earn income like a paycheck? Now, usually when I present something like this, I hear some guff from people saying, hey, $100 a day is not much of a goal, right? You might have made significantly more than $100 a day in your job. A lot of people will say, hey, $100 a day isn't going to cut it. You know, that's just going to scratch the surface at replacing my job. That's true, but you've got to start somewhere. A journey of 1,000 miles starts with a single step. You got to start in the right direction. You don't want to start by going backwards. So even if it's $10 a day, I don't care. You've got to start by making small steps in the right direction. So the power of tiny gains will add up over time. This is extremely important to understand this. Now, if I were to challenge you and say, hey, I want you to get better at your trading by 1% between today and tomorrow. So I want you to go home, work on your trading strategy, your plan tonight, come back tomorrow, and I want to make sure that you're 1% better. So you say, okay, thumbs up, I can do that. You come back the next day, you're 1% better. Awesome. Okay, now do it again. And again, and again, and again. Every single day, if you can get 1% better, if you could do it one day, then you can do it the next day and the next day and the next day. If you get 1% better every day at the end of a year, you're actually 38% or 38 times better at what you're doing. Imagine if you were 38 times better at your craft today, a year from now versus today. How would that change your life? So pick one thing, and I'll repeat on this in a minute here. Start with a modest goal, even if it's 10 or if it's $100, I don't care what it is. Continue to improve on it every single day. This is the key to success over time. Not a different indicator nor a fancy strategy. That's what we all think is going to be it, but it actually is between our ears. It's being able to focus on getting better at one simple thing. That is the key towards improvement. Okay, so we use an income pyramid. What I want you to do is I want you to work on the heavy, slow stuff first. This is where most of your capital should be. These are strategies that might take weeks or even months to mature. And it's okay. They're going to move at a glacial pace, very, very slow, easy to manage. This is where I want most of your capital at. What I see most people want to do is they want to build a house starting from the second floor first instead of building the foundation for it first. And then they wonder why it slams to the ground. Build up from the bottom first. So work on an index strategy first before you go into equities. And before you go into directional trades or anything like that, work on the non-directional stuff first. So this is typically how we build up using capital. Now, your approach is going to be different from everybody else. Everybody says, hey, how should I do this? You know, what should be my one thing? What should be my approach towards this? Well, you're going to have a different version of or different amount of capital to work with. You have a different amount of time that you have available during the day, and you have a certain starting point in knowledge. So a lot of people will say, hey, I can't be successful in the market because I'm capital constrained, or I work a job and I don't have very much time available. Okay, give me those people any day, as long as they have the attitude that knowledge is unlimited. They can get better every single day. Then give me those people every day, because they will succeed. So I don't care if you're capital constrained. I don't care if you're time constrained. Those don't really matter that much, as long as you can overcome them by understanding that knowledge works above everything else. Conversely, what I see is a lot of people try to overcompensate by saying, hey, I've got a lot of capital that I've saved up over time, so I should be able to just, run into this and overcome the market with my sense of capital. Or I've got all day long to trade. That's another mistake too, because there's only so long that you can actually act as a trader during the day and keep the right attitude. So you're going to have a different combination here, that Venn diagram. Keep that in mind. I want you to work on understanding that knowledge is unlimited for this. Yes, it is easier for larger accounts. We could just sit there and wheel on Apple all day long. But again, I'm assuming that most people are starting at capital constrained, time constrained. So that's where I'm going to focus my time here today. Now, I saw a movie about 30 years ago. It was called City Slickers with Billy Crystal. And there's a magic moment during this movie. And this made a huge impression on me. And it led towards probably the best decision that I ever made. Because when I was learning to trade, I immersed myself into everything. I knew a lot of things about a lot of different aspects of trading, could quote you chapter and verse, read all the books, everything like that, was completely immersed in it. But the problem was I wasn't making any money. Does this sound familiar to any of you? Where you know a lot of stuff, but you're unable to put it all together. There's a line in this movie from Billy Crystal to Jack Palance here, who plays Curly, the tough cowboy. And he says, what's the secret to life? And he holds up one finger. He goes, just one thing. Nothing else means anything else. Well, what is the one thing? Well, that's what you have to figure out. All you need to be successful as a retail trader is to master one thing. Narrowing your field of focus to one thing actually improves your odds and actually will speed things up. We are all taught that we have to diversify. The first thing we have to do is don't put all your eggs in one basket, diversify. And that actually works totally against us. So my journey didn't start to accelerate until I literally swept my desk off and said, I'm sick and tired of this. I'm sick and tired of all these positions that I have where I don't know exactly what I'm doing with them. So I'm going to pick one chart, one option chain, one strategy. I will not move until I mastered that. And so by doing that, actually, I sped things up dramatically from that point. And it was only 6 months after that that I turned my notice in. You can get really good at something if you focus on one thing. And from there, you can always diversify, right? It makes sense to diversify so you understand different opportunities in different markets, but don't start that way. Start with one thing. What's your one thing? I don't know what that is yet, but it's got to give you, to borrow a term from Brett Steenbarger, it's got to give you the rage to master that. So today's focus is going to be on active income. We're going to use these weekly options, which I'll explain in a minute. We're going to seek to make a specific income goal per day. We can skip days if we need to, if we're trading a small account. So let's talk about 0-day options for a second here. Now, you've heard of weekly options. They've been around for a while. They've been around maybe, 15 years ago. I think it was 2005 when they first came out in the SPX. And we used to only have these options back here, these big monthly options, these big monolithic monthly options. So we had to do everything kind of squeezing it into a monthly cycle. And so, hallelujah, we get these Friday options coming out once a week. Okay, great. But the S&P did one better. As of last year, they completed the cycle, and now we have options 5 days a week, Monday, Tuesday, Wednesday, Thursday, Friday, all the way through. So that's on the SPX. It wouldn't surprise me down the road to have hourly options, either if there's enough demand for it. All they have to do is fire up a few more servers on AWS, I'm sure. Now, we also have this on the NDX, which is the NASDAQ 100 options index, as well as the ES, the S&P 500 E-mini, and the micro E-mini also have 0-day options. And we can also trade the ETFs. So these have 1/10 the notional value. So the spiders and the Qs also have 0-day options. The IWM and the diamonds do not yet. They're kind of behind, but they're not quite as popular as the spiders and the Qs. The thing I love about these is these options expire today. So we have an 8 June option, which expires in about 1 hour and 20 minutes from now. So imagine this. You've got this roaring fire on the other side of the room from you. That's supposed to be a fire. You walk in and start walking towards this. You've got an ice cube in the palm of your hand. Now, that ice cube is going to have some kind of passive melt by itself just because of the heat of your hand. But as you get closer and closer to this fire, the temperature that that ice cube senses from the fire is going to vary by the square of the distance. As you cover closer and closer, it's going to receive more and more heat from that. So this is why options melt just like an ice cube would as you walk into the room towards that fire as we get into the expiration closing bell. Now, these are very sharp instruments. This is not the place to learn your first option trade. So if you're new to options or if you're just getting started, just getting your feet wet, I wouldn't start with the 0-day stuff any more than I would try to hit a 90-mile-an-hour fastball in a batting cage, right? So they have different batting cages in these sports parks that, at least the ones that I used to go to when I was a kid, you used to be able to work on your 40-mile-an-hour fastball or your 60-mile-an-hour, 80-mile-an-hour. You don't go into the 90-mile-an-hour cage to begin. You start at the 40 and work your way higher, just like everything else. So consider extending the trade out over a few days to slow down the trade. We use 5 trading days with what we do. Now let's talk about strategies. Everybody likes to talk about tools and strategies, so we're going to get right into that now. Now, think about this for a second. If you're going to do a directional trade, price is going to go up, down, or sideways, right? Now, this equates to a 33% chance of winning on an outcome basis, right? Because it can't go, if it goes sideways, you still lose money. That's opportunity cost. You got money locked up in there that It's not making any money for you. There's no return in that. So that counts as a loss, 33%. And if you're trading long options, it's probably lower than that. Now for a neutral options trade, you're going to either see the price go up, down, or sideways. But in this case, if it goes sideways, you win. So we're going to look at a 67% chance of winning or more, since an asset trending sideways will get you a win. So to me, 67% is better than 33%. When I learned this initially, I couldn't believe it. It was like, wait a minute, this is great. So as long as you can risk manage, learning to win more often is a revelation to most traders. Now let's talk about some strategies here. The short strangle, where we have a short, this is a short put here, and we have a short call. This is the king of options selling strategies used by professionals. The problem is the huge margin required due to the unlimited risk profile, because this keeps on going down. This keeps on going down, right? So you hear all kinds of war stories out there from newer traders. Somehow they're almost always airline pilots. I don't know what it is, but it's always airline pilots that get together and work together and get destroyed together using short strangles. That works for years until it no longer does. So, but this is still the king. This is still the king of option strategies due to its speed, width, and as long as you can risk manage, this is the way to go. But not everybody can trade naked strategies on the SPX, right? So this is where we get into risk managed or risk limited strategies like an iron condor. And most people that learn about iron condors go, wow, this is great. So I want to get this thing as wide as possible. So this is typically what they will do, is they will get this thing as wide as they possibly can. And this is what I call a high probability, or HP iron condor. So for this style of condor, probability is increased, but we sacrifice reward to risk. It can be very difficult to play during low volatility markets like what we've seen lately. So last year was great for these strategies. This year, not so much. So this is why we've gone to what's called the low probability iron condor, where we've got a one-to-one reward to risk. The other advantage to this is that with this better reward to risk is that it also operates faster, because we've got options closer to the money, closer to the fire. So it actually has some huge advantages here. It's also terrific for smaller accounts because the margin is much, much less than a high probability. So this is one that we're going to talk a little bit more about today. And of course, we could collapse this thing all the way in to make an iron butterfly. This is an iron condor, which has got zero width from the short options. And width, in this case, is sacrificed for speed. This is actually what I trade on a 0-day basis. So a lot of times I'll do 0 DTE iron butterflies because they're quick. We can get in and out usually within 20 to 30 minutes or so. Also, what works for this type of market is a calendar spread or time spread. Works best in low volatility, quiet markets that have reversion to the mean. Okay, so set up correctly can be a very rapid trade, but it takes a while to learn how to set these correctly. So you don't need to learn 42 different fancy sounding option strategies, just a handful of these if you're an insurance company business model. So let's get into techniques for offense. So how do we learn how to set up the trade? Well, this is what I found was there's a certain religion that's out there. Now, the random walk is mostly from people from Chicago that work in the CBOE and places like that, where if you go in the CBOE, you're not going to see one price chart in there in the entire building, not one single price chart. Everything is numbers there. So everything is probabilities based, statistics and numbers. And for most retail traders used to looking at charts, it's kind of bewildering. But random walk implies that there's zero knowledge about forward price action, so forward price movement fits into a log normal distribution of price. Makes perfect sense, right? But most of us don't start by trading in the CBOE, so we're out here as retail traders trading off the floor, And so for us to do price discovery, we don't have a pit, so we've had to use charts. So technical analysis implies that we can project forward price movement based on past behavior. It's not quite right, but we'll talk about this in a minute. So you got these two schools of thought out there at religious extremes. Both of them think that the other is ridiculous, right? But I think there's things that we can use from both of these. Why not use both of them? So random walk, what we do, we use the expected move. We find a plus and minus 1 standard deviation distance for where the current price is. We're going to use the option delta to find the probability of success. We're going to stack the odds in our favor by placing positions outside of this expected move. And we want to target positions at specific delta entries so that we can be very consistent and precise. So here's an example of something like this. If we look at an option chain, we can say that we have a certain expected move in Thinkorswim specified here at 50 points. And if the current price was 42.73, this gives us an expected move envelope of plus and minus 50, or 43.23 down to 42.23. So this gives us a 68.2% probability envelope for understanding where the price might just be by this expiration date. So we can locate positions outside of this envelope, such as choosing the short put with an 83.16% probability of success at the 42.15 strike price. So we're stacking probabilities like this. So it's not rocket surgery, it's just simple statistics. And then we can use technical analysis to augment this, right? We're not predicting the future with technical analysis. You know, I see so many people go, hey, it's overbought, so therefore it must turn down. No, it doesn't have to. It can do whatever it wants to. Just because your oscillator says something's overbought doesn't mean really anything at all. So understanding how to augment the probability analysis through TA is what we do. The other thing that we do is we have found that price moves in kind of a very natural method, right? If you're going to summit a mountain, you're not going to just sprint up the thing and just, power your way up to the summit. Nope. You're going to go as far as you can and then consolidate. And then you're going to go as far as you can again and then consolidate. This is why they have base camps all the way up Mount Everest, so that you can acclimate yourself to a new altitude. That's how markets move. It's the same thing. So we see range expansion going to range contraction. This is where I get into fractal energy. I can't explain this in one slide, but perhaps what I can do is show you different applications of this. So this is the energy part of things. Imagine this indicator is almost like a fuel gauge with full. And when I say full, this has got potential energy. You guys remember physics class from 9th grade, right? So full and empty. Full means there's a lot of potential and this thing is ready to bust a move. And then boom, up we go. And then we get into empty down here. This is ready to consolidate. So these are high energy conditions where we see a very high value. This thing's ready to go. This thing's ready to go, ready to pop and move. And that's all we care about, is understanding when a price chart is ready to consolidate versus ready to move. It's not about spotting the breakout. It's not about directional or anything like that. So this study is actually called the choppiness index, which is a very kind of unique, very niche indicator, which not all platforms have. And we put it to good use by understanding when the probability is likely for it to stall. I'll show you an application of this near the end today. Actually, the next slide has got it. So here we go. This was a signal that we had on Friday and Monday. We had from this breakout on the S&P, which got above 4,200 finally after all this time. It exhausted itself on the move up. It takes a lot of sideline money to move something like the S&P a significant distance, and it moved a good 100 points during that time, which put it into exhaustion. And so what we had was range expansion going to range contraction. This is a fractal chart where we have the daily chart here in the 78 minutes over here. These are separated by a factor of 5. There's 5 periods of 78 minutes in a daily chart. So we use these different time frames to understand different levels of granularity for us to kind of break apart the market and understand how it moves. So we're going to stack probabilities in our favor. So I'm not going to go through all this today in the interest of time, but understand that there's 252 trading days a year. We don't have to trade every single day. Look for the probabilities to be in your favor. Be a sniper. Wait until your target wanders into your crosshairs. So let's talk about defense for a minute, because what typically happens is the newer trader wants to know about making money. The more experienced trader starts the discussion by saying, wait a minute, how much money can I lose? So let's do this now. To me, when we place an option trade, it's like kicking off the football to the other team and standing back and defending our goal line. It's the same thing. So I've got a couple of terms here. Static defense is basically the structure to a trade. It's one where we set up the defense or the stop, if necessary, ahead of time before the trade is entered. So this is not counting any kind of movement or anything like that. Active defense is things that we do on the fly. So once the position is in play, what kind of active movements do we have to hedge against? So the defense necessary for an iron condor trade will depend on the structure of the trade to begin with. You'll see what I'm talking about here in a minute. So the structure of the trade, like for a low probability condor, this is the static defense right off the bat. No additional defense is necessary with something like this. I don't have to do anything to risk manage this. I don't need to set up a stop on this type of trade from day one because it's risk managed. So what that means is I can withstand something like a black swan move. I don't have to wake up at 2 o'clock in the morning to check on the futures if I get nervous, which I do in other strategies, right? So I'm kind of tired of doing that stuff. So now I'm playing strategies that are closer to the money, not the ones that are way, way, way out of the money. So I'm playing tighter, closer strategies because they're better risk managed. The attractiveness of a high probability condor with all that width initially will go away once you have to wake up at 2 o'clock in the morning and check on a trade or check on the futures once, because, you know, things happen. Things happen like October of 2008 happens. March of 2020 happens where all of a sudden we have, you know, limit down days. We have the election of 2016 where you have limit down days. We have Brexit where you have limit down. All kinds of things like this will happen. If you're holding a high probability iron condor like this, you will be miserable. So we can do things differently with static defense. We can do it based on points. We can do it based on delta. So if we enter a delta, say like a 5 delta trade, if it gets up to 30, perhaps that's our exit. So we can set it that way. Or we can also do it based on the debit. So if we enter for a specific credit, we can set up our defense or stops by a certain debit. So understand that there's no perfect static defense. One that's too risk averse will suffer from early exits, and one that's too aggressive will allow holding through a lot of adverse movements. But when you do get hit, it will eat a whole bunch of profits for you. The legitimate exits will be expensive. So find one that works best for you, stick with it. So an active defense is something where it requires a little bit more skill to evaluate these. So the traditional problem with an iron condor is setting up this trade, then having the price attack one side. You step in front of this freight train move and you're standing on the tracks going, wait, stop. You know, I've got a risk managed trade here. You see it coming from a long way away. You see this big headlight coming closer and closer to you. It's hard not to be fearful. And people respond to this in a couple of different ways. Sometimes they just stick their head in the sand and pretend like it's going to go away, right? The other thing that you can do is you can be a little bit swifter about it. You can be more decisive and just get out. So this is definitely one way you can do that. So I found the best hedge, though, you can put hedges on. The best hedge is one that's placed with a very good reward to risk. There's a great statement I heard years ago: play defense during times of peace and not war. So one of the biggest questions I hear from people is we get a big sell-off and it's like, hey, should we buy puts now? Nope, it's too late. So hedging strategies, again, are not required with low probability iron condors, but set yourself up. If you're going to play the higher probability strategies, use hedge positions with asymmetric reward to risk. So one last thought on defending a trade. Please don't use technical analysis to defend a trade. Once you learn about technical analysis, you think you can do everything for you. You think you can make breakfast for you. You think it can, leads to, predictions of what the future are going to be. And eventually over time, what you'll find is that, again, you're trying to forward predict future price action based on past events. And I had to learn this the hard way. So only make exit decisions by the numbers, please. Okay, so let's go into the system here. And I'm going to do this really quick. And if you need to, you can go back on the replay of this. When you get the replay, you can go through this again. You can pick it apart. You can ask me questions later on if you want to. So we trade a variation of our strategy that best fits the current market. So what I see a lot of people doing is pounding that square peg into a round hole. They're trying to trade yesterday's strategies with today's market. So I think what's really, really important is to always understand the conditions and the context behind the market. What edge is the market providing? So currently we are trading low probability iron condors, not the high probability ones, the low probability ones. So we're going 5 trading days out. We're using $5 wide spreads in the SPX. You could, if you wanted to, you could go with smaller spreads on the spiders if you want to, or even the XSP if you want something with smaller notional value. But still, even the ones that we do with the SPX, the maximum risk on those is $250 per contract. So we're looking for a 10% return. And this is what we're going to do. We're just going to do those 10% returns again and again and again. So we will avoid entry the day before big economic announcements. We'll also avoid entry on days where the market energy shows a lot of potential. So when the market's all wound up and looking for an excuse to explode, this is where we'll sit to the sideline. So we'll execute patience. Now let's talk about defense for a minute. Our black swan risk is set up from trade entry. This is what I love about these. I no longer lose sleep at night when the futures are moving. I don't care. So we can roll these. We can use active defense to roll these in the event. We can adjust these up to 2 times. If we step in front of a trend, if we get, it happens. And we can't freeze. We can't get paralyzed by that. It just happens. So we can roll the untested side. If you've heard of this before, we can roll up the untested side. I prefer doing that now versus rolling the tested side, which automatically locks you into a loss. So mean reversion is a real thing, and rolling the untested side is the way to do it. So it's a simple delta neutral random walk strategy, great for black swan risk. Now, it's also very important that you evaluate your results by the numbers, not your opinion. So every trade that we do, we log, we data mine it, we look at it, and we understand whether or not we're doing the right thing or if we have execution mistakes. So let me go through an example for you guys. Again, this is a trade that we put on Monday, 6/5, 11:19 in the morning. We saw an exhaustion signal to the upside. Actually, we saw that on Friday, and it carried over into Monday. So we said, okay, we can still do one on Monday. So we entered this for 255. We typically try to get at least 250 on the credit, and 255, that's okay. That just makes it a slightly more narrow. Immediately, we entered a 220 exit debit and established the delta limits for the trade. So that's our active defense. There's nothing else to do. There's nothing else to do. We don't have to sit around. This is why we call it 12-minute trading, because basically it takes about maybe 5 minutes to set up, 5 minutes to tear down. So we've created a one-to-one reward to risk trade setup. And then the next day it fired in the afternoon. It decayed enough within about 28 hours the whole time to secure us 10% return on risk. So again, we're just getting base hits. We're not out there swinging for the fences every single day. It's just base hits every single day that we can, every single day that the trade setup is there. So Dave and I at 12-Minute Trading have been doing this service now almost a year. And out of 267 trades, we've won 242 of them, 90.6%. We have an aggregate profit factor of 1.75. For every dollar we lose, we win $1.75. Anything above 1.5 means you're printing money. And what I'm most proud of is the strategies that we've been doing, where I see everybody grinding their teeth and gnashing since the beginning of the year, saying, this market's so hard to trade. We switched over to the low probability system, and our performance has actually even increased. We're running almost 97% with a 5.78 profit factor. So that is, we're making that sing for us right now. So let me wrap up here and put you guys back in time, back on time, I should say. So nothing I've talked about in this presentation is really new. These are all the same concepts that everybody's talked to you about. Traders have been selling iron condors in the SPX for decades, yes? So why is it that so few are profitable? Perhaps they lack the discipline. Maybe they don't have a system. More than likely, they'll lose confidence and give up after the first loss. This is what I see from people over and over again. I see people buy a program or invest into a system and, get all excited about it. Like, oh, this is my key to success and future. And they'll take a couple of trades and they don't work out. And they don't bother to understand why they don't work out. They just say, well, I got scammed again. And so what they do is they see this other bright, shiny penny over there. They go thundering over here. They spend another, $1,000 on a system, take maybe a couple of trades in it after a couple of months, and they lose faith in that one too. So they end up just going in circles and eventually ending up back where they started at some point. And this is what I see over and over from people, is that instead of getting 10 years of experience, they'll have 1 year of experience 10 times, just looking for the Holy Grail. It's not hard, guys. All you got to do is just find one simple thing and determine for yourself that you're going to dedicate yourself to that. You've found your one thing and you're going to attain mastery in it. And once you do that, it will happen faster than you can believe. That's what I want you to understand. Confidence must begin by gaining knowledge and then applying that knowledge. You got to learn to win. What most retail traders do is they trade not to lose. They're afraid of losing. You have to learn to trade to win. So if you'd like to gain the confidence that comes when you learn to win, then consider joining me at the 12-Minute Trading Daily Target 100 service. What we shoot for is 100% returns at the end of a year. Again, base hits. Learning to build that foundation is so important. So we meet as a team every day in a live trading room. This is me in my Hawaiian print shirt. We run a pretty loose room every day. So we meet for about anywhere from half an hour to 45 minutes or so, depending on the questions. And we enter trades every single day to give you reps in the system. If conditions do not warrant a real entry, I'm not going to pound that square peg into a round hole. We'll enter it in sim. All of our live trades are posted in the class portal, email, SMS, backed up by a live tracker. We do everything we can to communicate with people what we're doing. You can see some of the tools that we use here, some of the trade updates. We have got a full strategy course out there that'll take you a couple of days to get through everything. So there's quite a comprehensive course. Text messages, here's the update from the other day. So each day in the trading room, we do a full read on the market. So I'm going to come in and say, this is what we see the market doing. Here's the energies. Here's the trend. Here's the opportunity. Here's the risk. Think of every day as a live coaching session with me with an experienced wolf pack right there at your side. We got a lot of really good traders in the room too. So today's webinar special, 2 weeks of free trial. You can join me for 2 weeks for free in the Daily Target 100 service. You can show up every day, go through the materials. We're not going to limit anything to you. We want you to learn and see what it's like in the room. If you go to 12minutetrading.com/T100TE for traders exclusive. Okay, so come and spend 2 weeks with me live. If it works for you, it's only $147 a month to stay. Cancel at any time. You can learn a lifelong skill for $147 in a month. Please don't miss out on the free trial, as it will be taken down soon. No risk to try it out. And we almost got you back on time. I will take any questions that you guys have at this point. Any questions for today?
You do have a few. One person is asking, is this the same program that used to be called 7-Minute Trader?
No, I don't think so.
Nope.
No.
All right. I got a couple of people asking me questions about recordings. I will answer that in just a little while, Aurora. What's the difference between the tested and untested side?
Well, the tested side, like if you put up an iron condor here, if we do just a quick iron condor, so here's what they look like. Here's the zero line, right? So we typically enter with the price in the middle here. And so it gives us a lot of room for the price to wander around. Eventually, at some point, it's going to test one of these sides, typically with positive drift. It's usually heading to the upside. Okay, so this becomes the tested side. And if we need to, if it starts to work into a trend, what we can do is we can simply move this side up and manage our deltas like that, reduce our risk on the trade, narrow it up a little bit, and just kind of go with the trend. It's a very simple adjustment.
And someone, Derek was asking, this was back probably right when you, maybe 10, 15 minutes in, saying, what happens if the exchange closes down your stock for a day? What happens to your position if you have day options?
I can't imagine them closing down the S&P 500. So this is why we trade an index like the S&P 500. We want the biggest, baddest, best option chain that's out there with the most liquidity. We're not going to trade a small unknown stock with a very illiquid option chain like, Joe's Ugly Shirt Company on the Russell 2000.
Okay.
That could have something like that occurring.
Okay. All right, cool. I hope that helps, Derek. Let's see. Should we read your book to understand the strategy before taking the free 2-week live room trial?
I wouldn't necessarily do that. I mean, first of all, the trial's only going to be open, I think, through the weekend, and then we shut it down. So I would get your 2 weeks in, and
So this link is not. It's not normal for there to be a 2-week free trial, Steve.
Yeah.
This is something that Doc opened up just for Traders Exclusives audience. So if you're going to do it, you probably ought to jump on in there and read that book on the side while you're getting all the good live stuff, right? That pretty much tell the story?
Yeah, I think that's, action is always, you got to follow the action.
Yeah, and by the way, if you're reading the book, you can ask questions while you're reading the book, right?
Yeah, I actually get quite a few. I leave my email address at the end of the book, and I get a fair amount of questions just coming in randomly through email through that. So
Awesome.
I love to help people.
All right, awesome. And Hank asked, do you do double calendars?
Well, we do single calendars, which can turn into double calendars. The thing I like about a single calendar is it's a lot faster than a double. So we'll start out with a single, and if we need to, we can adjust it into a double if the price starts to move.
Good deal.